Go ahead and get started. It's now 7:05, and hopefully we get some more people to join in. If not, we're just going to keep going, and we're recording this, so this information will be, able to be shared. And just to introduce myself, my name is Melissa McClendon. I am a realtor, associate broker, investor, part owner of NOLA Home Realty Group. And just to tell a little bit about myself, I got into real estate as a real estate agent 6 years ago. 6 years ago, just recently, I made my anniversary. And the reason I got into real estate is I actually had gone through a difficult part in my life. I was going through a divorce and decided I wanted to sell my house to start off fresh, start new. And my idea was to save some money on commission. I would go ahead and get my real estate license. That way I will understand the law, know what I needed to know so I could put it for sale by owner and try and save myself some money. So that was my only reason for going to real estate school. So got my real estate license. My sister actually wanted to buy a house. So I helped her with finding a house, buying a house, the whole process. And when I did that, I realized, man, this is kind of cool. I got my check. I enjoyed the process because I always loved looking at houses. And once I helped her with that, I said, well, this is something I can do part-time. I'm a single mother of 2 daughters. Let me do it part-time. I can make some extra money. So started doing it part-time, and what started off as a part-time thing started to where I was getting so much business because I was passionate about what I was doing. I did a great job. I didn't do it for the money per se. I was really doing it to help other people. And I eventually had to quit my job and start doing this full-time. So here we are now. I'm actually have rental property on my own now. Have done really, really well in real estate. I've become a multi-million-dollar producing agent. What a great deal of success in real estate. And I don't say that to kind of brag on myself. I more or less say it to show you where you can start to where you need to go. This is kind of the purpose of our seminars, to talk to people like myself who were once, in a position as a first-time home buyer, to show you what is possible that you can do. Home ownership is a way to generate wealth for your family, something you can pass on, and it's just a beautiful thing. So that's just a little bit about myself. And said enough about myself. I want to introduce the phenomenal Randy Chambliss, who I've known for some time now since I've been in real estate, who I've done some deals with. Who I know a little bit about. I know he's a great family man, husband, father. I follow what he does. He has positive, God-fearing energy that I really admire and encouraged by. He's also an investor. He's done some new construction projects and some rental property projects. He is executive director of Louisiana Housing Authority, which focuses on getting 100 families in a home, becoming a homeowner. And he's also a mortgage branch manager. So he's got some serious experience behind his belt. And with no further ado, Randy Chambliss.
Hey, Melissa, thank you. Can you hear me okay?
I can.
Awesome. Well, I appreciate it. And I want to give it back to you because it's just been a pleasure to work with you and your team. Ever since the first time we met, we started doing physical in-person home buying seminars, and we had great turnouts. And, like you mentioned, we did some deals together, the communication, which has been always great. And I just love your resilience and your passion that you have for your clients to help them really understand the process so they're comfortable. So thank you for, allowing me to be able to be a part of the journey with you. So having said that, guys, I want to welcome you too. It's Friday evening. You could have been doing anything else, but you guys decided to say, listen, you know what? Let me go ahead and jump on this call because I want to be able to learn more about real estate. How can I buy my first property? But more importantly, how can I teach, somebody else? One of my philosophies is, each one teach one, pass it on. And as you see, Miss McClendon, she's that broker, she's that realtor, and that's what she do all the time. She learn and she pass it on without, anybody, without holding any information back from anybody. So as she mentioned, I'm the co-branch manager. My wife, she's a co-branch manager with me with Geneva Financial. We just brought the first branch to New Orleans. We're super excited about it. It wasn't really my plans to open up a branch. We was doing a lot of real estate investing. But when the opportunity came across my desk and I saw the products and services that we could use in the community for our clients, it made it a no-brainer for me. And I just jumped on it. And, for right now, we're just making some big things happen right now. Just a little bit about Louisiana Housing Authority, as Ms. Melissa mentioned. We are a trusted advocate for home ownership, right? Foreclosure prevention specialist, and also a housing development organization. We are a state incorporated company that's private, right? Also our mission is huge. It's to help every Louisianian who wants to become a homeowner have that 5-star exceptional experience when purchasing a home, to way beyond the closing. Meaning that once you close, we still want to be a part of your journey in home ownership, because you might have questions after the closing. Things might come up later on, 2-3 years, and we want to be that person to be able to help you with that, right? And so, having said that, just to tell you a little bit about myself, I think it's only fair. I come from a 2-parent background. I was not born with a silver spoon in my mouth at all. My dad was a construction worker for over 30 years. He was injured on a job. He retired very early. My mom was mostly a stay-at-home mom until I made 13, 14 years old. And she started working part-time as a domestic worker. And having said that, I became an at-risk youth in the city of New Orleans myself, even though I had both of my parents, and I had an older brother that was 11 years older than me, that was teaching me and sharing me some things that he'd done, hopefully that I didn't make those same mistakes. But lo and behold, I made some mistakes myself at an early age, became the at-risk youth, as I mentioned, and I became a struggling single teenage father at the age of 19. And fast forward to 2005, when Hurricane Katrina hit, many guys on this phone, on a Zoom call, you could relate, I lost everything that I owned in Hurricane Katrina. I was living in the Gentile area, right around St. Anthony and Robbie Elite. Water was to the roof of my home, my parents' home, water was to the roof. Couldn't even save a photo. And at that time, I was working as an engineer for the city of New Orleans. So I was making, a stationary engineer. I was making pretty good money, as they say. But I was spending really good money because I didn't have a financial education. My money was going right out the door. And at that time, when Hurricane Katrina hit, I had less than $500 in my bank account. I was broke and I was busted, and I was most broken at that time. But I'll be the first one to tell you, my credit score was horrible. It was in the low 500s. But at that time, I realized, this could never happen again. I can't have one income stream coming in and lose a city where I can't earn any income. So I decided to start looking around, and my mind was open like a parachute at that time. And I stumbled across a financial advisor. He was a senior vice president with a financial service company, and he taught me the rules of money. Like, he taught me the rules of how to save, income statements and balance sheets. And I got introduced to people like Robert Kiyosaki, the Rich Dad Poor Dad series. And I really started to work on my credit. I found a third-party company. I worked with them and started deleting these negative, inaccurate items off my credit report one by one. I started adding positive trade lines to my account. And my credit score started to go up. I started to actually have money left over at the end of the month. So I was able to have some savings going in the savings. And within a year, right, in 2006, matter of fact, in December 2006, I bought my first home. And 30 days later, I bought my first duplex. And I was 26 years old. Fast forward a little bit, I was helping people from family members and friends with their credit, how to purchase their own home. And I realized, you know what? This is my calling. So I ended up getting a license in 2008 as a mortgage originator. And ever since then, I've been originating loans. So I say that not to impress you, right? But just to press upon you in the real estate, in the mortgage industry, we could certainly help you, right? I could certainly help guide you through those challenges, because in 2008 and 2009, I was able to guide our buyers through those challenges within that real estate market crash we had. In 2011, I bought my first property to flip with my wife. It was tough. It was a real hard deal because it was the first time, right? But we got it done. In that first flip, we made $26,000 off that first flip. We took that same money, did it again and again. We started teaching classes publicly in the community of how to invest in real estate. And then fast forward, we started building new construction in the Gentile area in 2016 and 17. So, that's my journey. I'm just want to, again, just to share with you that Melissa and I, we can help you to navigate this home buying process. So listen, let's just dive in right into it, right? So step number one, you're already doing it, right? You're getting the specialized knowledge and skill set that you need so you can be comfortable and educated enough to make some good decisions on your path to home ownership. So congratulations, step one is already done. So step two is to get pre-approved, right? So you want to choose the right lender, right? A first-time home buyer, you need a mortgage loan originator with experience that can actually assess your needs and put you right in and put you in the right program, right? There's different programs, but it's not the right fit for everybody, right? So that's step two, right? The question you might be asking, well, what is a pre-approval? Sometimes you hear pre-qualification as well, but here's the difference. A pre-qualification is simply that you talk to a lender, and that lender actually give you some information over the phone or in person. They ask you a few questions like, hey, what is your income monthly? What's your credit score? How much cash you have saved up so far, etc. And when you verbally tell them the information, they give you a letter and say, here you go, you're pre-qualified to go shop for a home. Well, a pre-approval letter is those same steps, but as an add-on, we're going to ask for those documents, right? Those documents. So they're going to make a request and say, listen, can I get 2 months of bank statements? Last 30 days of paycheck stubs. And now when that information come in, we can verify, oh, you do have enough to close. Oh, your credit score is strong enough to move forward. Now, once that information is verified, now you get what's just called a pre-approval. And what we do different in our company, we have a virtual underwriting system that we have. And we take this virtual underwriting system and we send you to this underwriter up front. And if it come back approved, then we're pretty confident that you're going to be pre-approved when you get to the physical underwriter. Why? Because the same guidelines that our virtual underwriter has is the same guidelines that the physical underwriter has to go by. So we understand the guidelines. It's no different once the underwriter have it or the information that we have. So we want to make sure that we making sure you meet those qualifications before you start shopping for your house. So that's the big difference between being pre-qualified and being pre-approved. And then also being pre-approved gives you a stronger opportunity when you're purchasing a home. Because when that offer come across, when Melissa help you and guide you through the offer and the seller sees that offer, if they call your lender and they ask, hey, have they been pre-qualified, pre-approved? That pre-approval is much stronger in the seller eyes than a pre-qualification. So that's the big difference between a pre-qual and a pre-approval. Next step, right? You find a realtor, right? You want to choose the right realtor. And you want to make sure that as a first-time home buyer, you need that realtor with experience. Melissa just told you right at the beginning of the call her background and her experience. That wasn't just to impress you, but just to prove to you that she can help you navigate through that process. Your realtor should be able to represent and assist you in every step of the way, right? The next step, you do not, I'm going to repeat, no butts in seats until you are pre-approved, right? Meaning, I see a lot of people, sometimes they start to shop online, they start to drive around home, they start to call realtors and say, listen, I want to see this property. And homeowners or potential buyers, they get excited, right? They get emotional, and they should be, because this is a major move, right? They need to get in that environment of success, right? But they haven't been pre-approved yet. And so sometimes they're not quite ready right now, and they don't have the action plan to take to get ready. And so you want to make sure that no butts in seats until you actually talk to your realtor, be able to talk to your lender, have those documents in, and then you hear from your lender say, listen, you're good to go. At that time, then you can implement that strategy, butts in seats, right? So step 4, right? Shopping for your insurance. There's 2 types of insurance that you need to be aware of, right? There's one, your homeowner's insurance. Some people call it hazard insurance, which basically means if anything happened in the home, whether it's wind related, fire related, etc., your insurance policy can cover that cost for you, right? Number 2, flood insurance. If you're in the flood zone, it's going to be required by your lender, and that flood zone obviously going to take care of any floods that may happen in your home. But I want to caution you and warn you, even if you are not in the flood zone with that new home that you're buying, you still want to get that flooding policy, because we never know what's going to happen. And the policy is going to be super cheap, right? So those are your insurances that you want to be aware of. Now, you guys don't need to have all these resources, right? That's why you have your real estate professionals, right? Melissa could help you to guide you to the right insurance agent or insurance producer. I can help guide you there as well. So you don't need to know all these things, you don't need to know these resources. You just need to know that you have them available to you when needed. So the next step is, guys, is to get a home inspection, right? This is a very, very critical part in your home buying journey. And Melissa, if you don't mind, can you chime in and just kind of give us some feedback about why it's important to get a home inspection and what's some of those steps in that inspection process?
So I would have to say one of the most important things you do during the home buying process is the home inspection. Because you don't want to buy something and you get into the home and you have a serious issue and you're putting out all kinds of money that you weren't planning for. So, you always want to check under the hood, as we say. So once you negotiate that offer and you get something under contract, you want to get a home inspection. If your realtor can usually recommend companies if you don't have one of your own. If you're looking on your own, you want to do a little research, see what their reputation is. But you want to get a home inspector that is licensed, insured, get them out there, and they're going to check from the roof all the way down. They're gonna tell you what the condition of the roof is. If there's anything that needs to be done, they're going to tell you, are there any plumbing issues? Because these things are expensive. Getting a new roof is expensive. They're going to look at the electricity to see if there's any issues that can create problems. And this creates a whole nother negotiation period, because if there are issues that come up during the inspections, you can actually go to the seller and say, can you help me get these things done? Can you give me some type of credit? What can be done so that I can move forward with this property? And a home inspection is going to cost you probably $600 to $700. But it's well worth it, because you don't want to purchase a house for $200,000, $300,000, and then get in and you have a plumbing issue that costs you $10,000 to $20,000. So that $500, $600 can save you thousands and thousands of dollars. Did you want me to talk on appraisal a little bit?
Yes, ma'am, if you don't mind.
Okay. And another step after you get past inspections and you decide to move forward with the property, when you put in an offer for a property, you negotiate that sales price. So whatever price that you guys agree upon, an appraisal is going to come out. They're going to do an assessment of the property. They're going to look at comparable properties, and they're going to give a true value of the property. And this is very important. This is another cost involved. It usually costs about $500, but this is your way of not paying over market value for your house. You don't want to pay $200,000 for a house that's only worth $150,000. That appraisal is going to come out. They're going to look at it. They're going to look at the condition and really assess to see what this value is. And if the value comes in low, then either the seller is going to have to lower that price, or you're just going to have to say, this is not the house for me because I don't want to pay more for it than it's worth. And that's all we have on those two topics. I'll send it back to you, Randy.
Thank you, Melissa. That was awesome. And just to add to the appraisal process, the lender is the one that actually requests the appraisal, but we don't request the appraisal until the home inspection is completed and it's to your satisfaction. Because like Melissa mentioned, there is a cost involved with the appraisal. Why? Because they're a third party. Their service that they're rendering is the appraisal. So once they render that service and give you that report, that full report, their job is actually done, right? But to alleviate spending money that's unnecessary until the home inspection is done and you're satisfied with it, that's when we order that appraisal. So that appraisal is a critical part. And step 7 is basically, once you have the appraisal done and the house does appraise very well, now we go through the process of processing the loan. And what that simply means is that you have people in the background that's more than just Melissa and I. You have title companies, you have title company representatives, you have underwriters like we talked about, you have processors. It's a lot of people in the background doing a lot of things on your behalf to make sure that you win. And in that process, that window between after we get the appraisal report all the way to getting it clear to close, what these individuals are doing is checking the title on that property to make sure that the title can be sold, right? That you have no issues with home ownership. You have your work history being verified. You have, if you're renting, they might be calling your landlord, asking for rental history. So all these things are happening in the background, which is called processing. And then in the perfect world, now once everything is processed, now we get into that closing table. And at that closing table, you're simply going to be closing with an attorney. And at that table, there's going to be some documents you're going to be signing. So you went into an agreement between you and the seller to purchase the price at a certain price point, but now you're going to be executing that at that closing, right? So you can get those keys in your hands when you walk away. In addition to that, you're going to be executing a contract and agreement between you and your mortgage servicer as well. So there's going to be two contracts that you're going to be executing between you and the mortgage servicer and you and the actual buyer. So that is that closing step. So I want to give you 3 additional costs for you to be aware of. Well, let's mention 1, the home inspection fee. Number 2, the appraisal fee. Now, these going to be additional costs that you pay at the closing, right? Those first 2 fees is what you pay in advance to make sure that you even want to move forward with the property. So the first cost is going to be your down payment, right? We have different programs that's available. One of the most popular programs is called an FHA loan, which requires only 3.5% down. So if you can imagine for a moment, you have a $100,000 home, 3.5% down is only $3,500. If you have a $300,000 home, 3.5% down is still a hell of a lot better than 20% down that some people think that you might have, right? But there's also other products like conventional loans. We have VA loans. If you're a veteran, that's 100% financing. We have a very special program if you're on the West Bank of New Orleans, not in Algiers per se, but in the other cities like Gretna, Marrero, Harvey, etc. That's a 100% financing in those areas, meaning all you have to do is come up with the closing costs, right? Now, I'm going to give you a quick example just on an FHA loan, right? So let's assume that you purchased a home for $150,000, right? Now, 3.5% down of that 150 will be $5,200 that you will be required to come to the table with. That's your first closing cost. The second is prepaids, right? And it's called prepaids because you can actually be prepaying these things in advance, meaning your hazard insurance or your homeowner's insurance we talked about earlier, and your flood insurance, your insurance company wants you to pay those 12 months in advance at the closing. In addition, if you're in the city of New Orleans, you guessed it, they want their money up front too, right? They want that prepaid up front for their taxes. So we're going to guesstimate these numbers or estimate these numbers at $4,000 for your prepaid and number 2. And number 3 is your closing costs. And what that simply is your title settlement fee, your title search fee, et cetera, because your title company is very, very critical. These individuals are going to make sure the title is clean. They're going to take care of all the paperwork, take care of all the documents, get the signatures done. And so that way you can be comfortable and have a peace of mind once you close because it was done by a licensed attorney. So they charge a fee, obviously, right? So that's a third-party fee. So they usually, I'm going to estimate, I say $1,800, $1,875. And I say estimate because we're using this as an example, right? So bear with me for a moment. So when we add all those total costs, you could expect to bring an estimate to the table about $11,125, literally bringing the cashier's check to the table, right? Now, if you need some assistance, let's say, hey, I don't have $11,000 right now. Well, in some cases, depending on how motivated the seller is, that the seller can give you up to 6% towards your closing costs with an FHA loan. So for example, you take $100,000 home loan and 6% of that, that's $6,000 that the seller themselves can give you, right? So let me run some numbers real quick. Give me a moment. So let's look at a $150,000 home times 0.06%. That's $9,000 that the seller can contribute to your closing costs. That doesn't mean that they have to do it, right? It's a negotiation tool, but they can, by FHA guidelines, give you up to $9,000. So that means that $9,000 is going to cover both your number 2, which is your prepaid, and your number 3, which is your closing costs. Just to be aware, you can't use that towards the down payment, which the 3.5%, but it can be used towards your prepaid and closing costs. Now, if you get a gift from a family member, may have a mom, dad, cousin, brother, might say, you know what, I'll gift you $3,000. That gift can go towards your down payment. In addition to that, we do at Geneva Financial, and that's one of the reasons why I chose to partner with them after talking to the CEO of the company several times, that they have what is called a down payment assistance program, but I like to call it that we're financing up to 3.5% of your down payment. So that same 3.5% down payment that you need to close for FHA loan, we can actually finance that in the form of a second mortgage where that can eliminate that down payment for you, right? So we got some creative ways that we can make some things happen. But this just gives you a quick overview of what it looks like to purchase a home with a FHA loan. Now, this is the same guidelines whether it's a $350,000 home, right? So I want you guys just to get the concept, not so much focus on the numbers. Now, having said that, I want to talk to you a little bit about the initial qualification questions, right? So your lender's going to ask you some questions. So they'll get you on the phone and say, listen, are you employed or self-employed? Do you know what your credit score is? What's your monthly gross income? Not your net income. I want you guys to really get this. It's your gross income. Before any taxes, any health insurance come out, that's critical because some people pay a high tax bracket, especially if they're only a W-2 employee. Uncle Sam is taking up to 33% of their income before they even get their paycheck on Friday. So you get qualified based on the gross income. So always remember that. Also, the next question is, how much do you have saved for your down payment so far? And do you have any student loans? Because student loans are a big factor right now. In my opinion, that's going to be the next bubble that's going to be bursting pretty shortly. Because in some loan products, the lender have to use a minimum of 1% of their loan amount. So if you got a $100,000 student loan, 1% of that, that's what, $1,000 monthly payment, right? So that's some things creatively that my team and I do in the background to help with the student loans. But those are some of the questions that you can expect. Again, this is being recorded, guys, so anytime you'll be able to watch this video, press pause, take a photo, and write these things down, so that way you're prepared in advance to be able to talk to your lender. The next is, what's some of the initial documents for a W-2 employee? So if you're working for somebody else, you're employed by somebody else, you don't have a business, then this is the simple documents that's required up front. Number one, a clear copy of your ID, the last 60 days of your bank statement and our 401k plan, any IRAs. In other words, any liquid asset that you have, you want to be able to share that with the lender. Not saying that the lender gonna see, oh, you have $100,000 in your account. Well, you need to put down $100,000. No, that's not the concept. The concept is you are gonna be putting down what's based on what the loan amount, what the loan product requires. But the more asset that you have, liquid and non-liquid, the stronger and better your file is, and the better it could get pre-approved by the lender, right? By the underwriter. So you want to be able to show as much assets as possible. The next is a proof of a gift fund. So if you're going to get a gift, you need to have a proof of the gift fund. The most recent paycheck stubs, right? Last 30 days typically. Sometimes I ask for 45 days because some people get paid every 2 weeks and they might miss a day or two. So, but typically 30 days worth of pay stubs, and then the last 2 years of your W-2s, right? Notice what I did not ask for. I did not ask for tax returns. That's huge, right? So currently right now, we are able to get people pre-qualified, get them pre-approved, get them to close without any tax returns if they're 100% W-2 employee, meaning that all the income is coming in from their working income with their employee. The next, if you are self-employed, right? If you are self-employed, whether you have a W-2 income coming in and have a side business that you're filing taxes on, then everything that we needed in the W-2, we still need all those items, except we do need those tax returns at that point. We need the last 2 years of your personal and business tax returns, and also a recent profit and loss statement as well. So those are some simple documents. There's not a whole lot of documents. You guys already have this already ready to go, right? So those are the initial documents to help you get pre-approved. So when we look at the 5 major qualifications, you want to look at your income, right? That's a major piece. How much cash do you earn on a monthly basis gross? We want to be able to know that. What's your credit score, right? The credit score that you ideally want is at least a minimum of 640. We could get you approved for 620, yes, but you won't be able to take advantage of those super low interest rates. But if your credit score is at 640, then you can take advantage of those interest rates. Now, when you're at 680 or 700, oh, you just killing the interest rate right now. Your interest rate is super low, right? But income, credit score, and then cash available to close, we talked about that. Debt to income ratio, we're gonna talk a little bit more in details about that. I think it's critical for you to understand that. And then your collateral, like what assets that you have, which means that that property that you're buying is gonna be the collateral, right? So let's talk a little bit about debt to income ratio. You might hear the term DTI. That's what that means. And what that simply means is, what is the ratio between the income that you have coming in from your job or business versus the expenses that's going out that's showing on your credit report? That's a ratio that's determined, right? So now let's kind of look at an example. So let's look at this example. Let's say that you're earning $3,500 per month. We're gonna time that by 50%. That's a 50% ratio, right? That means $1,750 is gonna be what the lender's gonna say, this is gonna be the target. Now you're gonna minus any expenses that you have on your credit report. In this example, was just a couple of expenses, which is a couple of credit cards look like, or maybe one car note of $550. So we take the $1,750 minus the $550, that leaves you with $1,200. That $1,200 represents that's what you can afford based on the guidelines for your principal and interest on your loan, including your taxes and in your insurance policies that you have. So once you understand it, once you know that, now that determines how much home can you purchase. In this example, you could purchase up to $180,000 home and still be underneath $1,200 a month payment. Now, again, I'm using this as an example. If it's a $350,000 home, the same apply, right? So in this example, we can use a 3.125 interest rate, right? Fixed rate for 30 years, it will never fluctuate. So let's look at the principal and interest payment on $180,000. That's gonna be $771. That's what you're gonna pay directly to the insurance company, right? Principal and interest. Your flood insurance, that's gonna be $100 a month. Your hazard insurance, which is your homeowner's insurance, $125 a month. Real estate taxes, $120 a month. And your mortgage insurance is $75 a month. Well, let me break that down real quick. The mortgage insurance piece is that the mortgage lender, right? That lender is going to ask you to pay the insurance policy for their benefit, right? So just in case you default sometime in the future, this $75, as an example, insurance policy that you're paying is going to protect that lender to make them whole in case something happens and they have to foreclose, right? But that's required if you don't have at least 20% down on your down payment. The real estate taxes piece, that's your taxes that the city that you're buying a property in charges you, right? So they charge yearly. So let's say it's a $1,200 yearly charge. Well, yes, you're gonna pay it up front at the closing table at $1,200, but every month they're gonna ask you to pay $100 per month for the next year, the following year payment. That goes into escrow, if that makes sense. So in other words, the $1,200 taxes that you have to pay for the city, they divide that by 12 months, which is $100 every month. And every month you pay that $100, $100, and that goes into this separate account called an escrow account. And at the end of the year, when your taxes is due, the insurance company literally gonna go in an account, that savings account for you, take that $1,200 and pay the taxes on your behalf. And that happens the same way with the hazard insurance and your flood insurance. It goes into an escrow account and they pay for your insurances for the following year on your behalf. So I hope that makes sense. So listen, this is something the people that's playing in the background that we talked about earlier. You have your senior loan officer, that's the person that actually takes the loan application. You have some assistants that collects documents. You have processors, you have underwriters, you have the closing department, appraisals and home inspectors we talked about, real estate professional, agents and brokers, insurance agents and producers, and also your title company agents that's going to be representing you. So you want to be able to make sure that you put yourself in a position to improve your financial situation. And that's the whole purpose of these seminars that we're doing, because we want to make sure you have the information so you can start working on it now, right? Some of you guys, believe it or not, right, you're ready to go right now. You can stop renting right now and start to purchase your home. Some of you guys may not be ready to purchase, but that's okay. Well, listen now, we want to be able to talk to you on the phone in a private setting and to be able to find out what those challenges are and be able to give you an action plan that you can follow and take. It's the same action plan that my mentor gave me when I lost everything I owned in 2005. So in that year between 2005 and 2006, I was working my action plan. I knew what to do. It was clear, it was concise, and I was just moving forward because I had a burning desire to buy my house at 26 years old. And so this is the same thing we're giving you guys, that true action plan. So listen, as I close and wrap up, I want to give you some thou shall nots, right? We heard about the 10 commandments, right? And that's one of my favorite books, and that's what I live by. But I want to give you some 10 commandments of the home buying process. Number one, thou shalt not apply for new credit of any kind, right? Number two, thou shalt not close or max out any credit lines. Commandment number three, thou shalt not co-sign a loan for anybody, right? Commandment number four, thou shalt not quit, change jobs, or become self-employed during the home buying process. Commandment number five, thou shalt not deplete your savings, right? So you want to have your savings intact. Commandment number six, thou shalt not pay off collections unless stated by your underwriter or your mortgage provider. Number seven, thou shalt not make any large purchases. No buying new cars, no buying new furniture. Wait till you get your home first. Make sure you got them keys in your hands before you go buy them furniture. Commandment number eight, thou shalt not miss any payments on existing accounts. You want to pay your monthly payments on time. Number nine, thou shalt not make any large deposits into your account or unless you consult with your loan officer or lender. And commandment number 10, thou shalt not pay your earnest money in cash or from any account you don't disclose during your application. So listen, guys, these commandments are designed to say one thing. I just want you just to get this. When you talk to your mortgage lender and they ask you those questions and you respond to them and you send over the required documents to prove what you verbally told them. Now, this lender has all the documents they need to see if you meet the guidelines. It's not personal, right? It's business. They want to make sure that you're meeting the guidelines that's set. And if you do meet the guidelines, now that's a snapshot. Just imagine you're taking a snapshot, snap. You want to stay in that picture frame. Your financial situation should stay the same all the way until you get the keys in your hand. You don't want to change anything. You don't want to make large purchases and large sums of money coming out your bank account. You don't want large deposits coming in your bank account because you got to source these things, etc. So if you just keep that in mind, you're going to fulfill these 10 commandments. Whatever you are, once you get your pre-approval letter, keep your financial situation the same all the way till you get your keys in the hand. So listen, guys, on the screen you see Melissa's number, you see my direct contact number. It's been an absolute pleasure to be able to share this information with you. I'm super excited. You probably could tell, I could barely stay in my seat. So Melissa, I'm going to turn this webinar back over to you.
All right, man, that was some really, really awesome information. I actually learned some things when you broke down about the pre-approval and the pre-qualification. I never really heard it broken down so concise, so that made me think, okay, well now I can truly know how to explain it, because I haven't always been able to explain it properly. So some things I learned, and I'm taking notes, and I'll probably look at this recording myself. But that was awesome information. Our goal, I'm a homeowner advocate for Louisiana Housing Authority, and the goal is to get 100 families to become homeowners. We are very passionate about that, and that's part of what we put this home buying seminar on for. So we just want to thank everybody for joining. Thank you, Randy, for the awesome information. And our contact info is on the screen. We are welcome to anyone contacting us if you want to have a one-on-one appointment or session and talk, we're very, very open to it. We're very easy to access. So look in the chat. We're also going to pin our contact information. And we thank everyone for joining. Randy, did you want to say anything before we left?
Sure. You guys have a great weekend on purpose. Take care.
All right. Thank you, everybody.